Hello everyone. For accounts, what I will do is I'll solve three problems, I guess. One should be the Copies Express because it has balance sheet, income statement, and cash flow, everything. Then I think I'll do BNL and Genmo. I'll try to. So starting from Copies Express, okay. So this is the problem statement. Copies Express was incorporated. This balance sheet on. You have to prepare all of them and this. Yeah. So I'm not going to do that approach where I uh, took that approach of some kind of journal kind of thing. I think we have to yeah, this kind of thing. So I'll start putting the values in the balance sheet, income statement, and cash flow as I go on. So for balance sheet, so it should be like asset, then cash, yeah. Then some other asset should be there. And from here, I guess I can write the liability and some liabilities will go to the side. I write equity from here. Okay. And I write the income statement in state. And here income expense. And that's it. From that, I'll create the cash flow later. So after the first year's balance sheet, total capital was of 55,000 of capital, so it was in equity, stock, capital, I think so. So 55,000 of that. Here should be the total liability. Here should be the total asset. And maybe we can write total equity and equity plus debt, equity plus liability, sorry. Liability, which should always be same as total asset. So let's write a formula to total equity plus total liability and the difference of this and total asset. Which total asset minus equity plus liability should always be zero and total equity is sum of all of this. Total liability should be sum of this, sum of this. Okay, so 55,000 was capital and 55,000 was in cash. Yeah, so 55,000 was capital and 20,000 as loan. And for asset, cash was 25,000. and inventory 50,000. So everything in the check is zero. We have to always take care of this. Okay. So yeah, so merchandise which had a cost of 7,000 was sold for 12,000 in cash. Okay. So merchandise which had a cost of 7,000. So the inventory got decreased to, it was the starting and it got decreased by 7,000. Right. So income and expense also you can write here, like net income. Here it will be this minus this should be total. And in equity, I think return um, this would be net income. Okay, so now merchandise which had a cost of 7,000. So 7,000 got decreased from the inventory and 12,000 increase in cash. And this 5,000 is in income. So, okay. So after that, Star Enterprise purchased additional merchandise for 7,000 on credit. So again, inventory got increased to 7,000 and liability credit purchase of 7,000. Still it's zero, good. Now another cash sale of which is 2,500 and inventory cost of 1,500. So cash sale of 2,500, right? Plus 2,500 and inventory cost was 1,500 and income from this was 1,000. Income. Okay. And credit sales of 3,400. So this is our 3,400. Inventory cost of it was 2,000 and the 1,400 was again income. Or maybe I think yeah, we can do that. Mm, it's it should be revenue and here we should put COGS. Okay, so it should be 7,000 sold at first plus, no, sorry, 12,000 was sold at first, plus 2500 plus 3,000, and the costs of that was 7,000 plus 1,500 plus 2,000. It's, sorry, 1,500. It looks good. Now, what was it? Yeah, 26. Employees are paid their monthly salaries of 4,200. Salary is decreased from cash and expense salary 4,200. So still, yeah, it's good. Advance receipt from customer, sorry, paid in addition of the Western request, one of the employee was given an advance of 750. So advance given for 750 in cash, advance salary, it's an asset, so 750. Then it will be expense when the employee will do it his job or her job. So advance received from customer 15,000, the order to be delivered in the first week of February 2019. So it's in the liability, so it's payable, or it's credit sales, credit advance from customer. So it will be advance from customer. We can write, I think it's 15,000, which is a liability, and it increased our cash. 1,000. Okay, and acquired land of 20,000, the entire amount was paid meaning. And so minus 20,000 of cash, land of 20,000. Okay, half of the loan was repaid, interest paid 18% per annum. The loans, half of the loan was paid, loan paid. So we can say that it's now 20,000 minus 10,000. Okay, and it was paid from cash only, so 10,000. Now its interest is 1.5 per month. Okay, so it was given in January, so 1 month's interest, so equals to 20,000 into 0.015, 300 rupees. So 300 rupees, is it working? Yeah. So we cannot pause it, starting the output. Yeah, so 300, 300 was the loan interest paid, right? So from here, 300 also paid by cash, but it is expense. So interest expense. Expense should be 300 more. Still it's zero. Okay, purchased a 2-year insurance policy for 2800. So it's asset prepaid insurance of 2800 and deducted from cash. So this is the total asset. This is the total liability. The total equity. Check is zero. Net income is 2900. So let's check if we have done it correctly. So net income seems fine. Cash, net cash flow is 8550. How can we find that? So last year's cash, and write it, I guess, here inside one. The last starting cash was 25,000. Starting, ending, so net, and inventory was 50,000. So net is in minus ending. Sorry, should be all the other way around. Starting minus ending and inventory consumed that much. Okay. So now if we see 8550, okay. Current liability is 650. Sorry, current asset is 650. Other current asset is 650. Where net actually. So it's current asset is receivable, inventory, and advance salary. And so these are the current asset. Land and prepaid insurance are non-current. So you can write here. Okay, so total current is total current is net of it is sum of except cash, right? Cash is also current asset, but I think here it is other current assets. Okay, so these are the other current assets, and cash is the only non-current is 20,000 plus 2800, obviously. 20,000 plus 2800. Liability, liability also current and non-current. Okay, current is non-current is obviously loan, and non-current is the loan previously was 20,000. So the net change in loan is right. So okay, the loan is also okay. The loan is not given only. Loan is also taken as current, I think. 1 year loan. Is it written somewhere? No. Half of the loan was repaid. I don't know why they didn't, sir, didn't take it as non-current. But okay, if it is current, if you're thinking that you have to pay it in 1 year only, then the total changes. So the total changes 10,000 plus 10,000 plus 10,000, 12,000, which is this one. And income and statement is given. And yep, So it's going fine. So now we have to write cash flow. Cash flow. We'll start with retained earnings. Okay, sorry, I paused at some point. I'm not sure when I paused or when I resumed. So I'll look into it a bit later. So what we did is, I think cash was given, like all the values of cash, I have done it in that set. Man, I think I have paused in around interest expense. So the interest expense for the year 20,000 we have calculated as 300. So that is an expense and it is deducted from cash. Okay, and then purchase a 2-year insurance policy of 2800. So that is prepaid ins insurance and the cash is deducted from here. So after that, we have to check the net changes. So the net changes are from start ending to starting. So these are the changes, and this is cash, current asset, and the other current assets are these three. If we calculate it, it's gonna be 650. These are the non-current asset. It's 20,000 plus 2800. I'm not doing that. So this is the total asset, total liability, and total equity. In here, all of them are calculated as current asset. The change is minus 10,000 plus 7,000 plus 15,000 is 12,000. Okay, so and these are the expenses already written. So now from for cash flow, PAT is given to 900. Interest expense I have added back and got the operating profit, and there is no DA. So this is the same as EBITDA. And now for accruals. Okay, so for the impact of accruals, let's do it from here. Receivable, receivable, receivable increase. So we got some money out of it. So 3400. Then advance salary, salary. Okay, receivable, sorry, receivable increase. So we have not got the money yet. So it will be obviously minus of that. So it will be basically 0 minus this value. Advance salary is equals to it is also stuck. So we have spent it, but not yet received. And then credit purchase. So we got the money, got the cash. So it will be this, and it was 0. So it will be obviously that. Sorry, credit purchases means we have bought it and we have not paid it back. So we have that cash in hand. So it will be added back. And advance from customer. This will also, we have got the money but have not used it yet. So we have the cash in hand. So that's all. Net cash from operation equals to this plus this. Now the total impact of accrual is sum of, sorry. So net cash flow from operation is 21050. For finance, let's say operating, investing, we have done land purchase of land minus 20,000. Prepaid insurance. Okay, prepaid insurance is a asset, right? Okay, prepaid insurance is also investing activity. So minus 2800. Total is 2 plus. And for financing activity. Mm, we have not taken any loan. We have paid loan paid minus 10,000 and interest expense of 300. So equals to this plus. Now net cash flow equals to this plus, sorry, this plus this plus. Okay, so I think I missed something. I have not, right? Okay, let me check. It should be it should be 8550, but it is not. So where did we go wrong? So where did we go wrong? So net cash flow should be minus 8550, but it's around this way. Okay, salary, sorry. Uh, no, salary is added. Okay, okay, let me check once. Hmm. Mm-hmm. Cash added. Fact of accruals. 15,000, 7,000. Okay, 22,000. Okay, let me check once. So let's check where we have gone wrong. I'm adding this 3. We are getting to around 12,050, but it should be 8550. Okay, so this is, I think, correct. This is also correct. So I think impact of accruals 34,000, 750 is also given 7,000 credit process. 15,000. Okay, I'm not sure. So let's see where we went wrong. So 21750, 21750 is not, it's not similar. So why it's not? 32,000, 3,200 is 18,550, 17,850. Okay, why is it prepaid salary? Okay, so change of inventory I have not added. Yep, so in the accruals also there should be another row. So let's add it. Let's move this. Let's insert something. Here, change in inventory also should be the inventory. So inventory got decreased, so we got money out of it. So it should be positive, right? Minus this. Mm, sorry, inventory got decreased. Yeah, so we got cash out of it. So yeah, now it's fine. Uh, so this is how we get the cash flow. I'm not doing direct. It's indirect is okay. We have to take care of everything. Yep. So one thing I missed was change in inventory. So in accruals, you have to take change in inventory, change in receivable. I took receivable, advance salary. I didn't took inventory. So you have to take all of these changes in cash flow. Okay. Okay then bye. I'll do the different videos of the other two in a different video.